Hello, good morning from my time here in Nigeria. My name is Pharmacist Jacob Daudagwari. I'm a trained pharmacist and a forex trader. I'm a trained pharmacist and a forex trader. Today, I want us to discuss briefly about market structure. Market structure. Now, for you to become profitable in forex trading, I know that you must know about market structure. You cannot escape this. You have to know about market structure because market structure will help you to know when to enter the market, when to place your trade, when to enter the market, when to get out of the market, when to exit the market. So knowing market structure is very, very, very essential. In fact, it's important, cannot be overemphasized. So, what is market structure? Market structure help us to know the direction of the market. So market structure determines the current directions of the market. And we have three types of market structure. We have three types of market structure. Number one, we have the uptrend. We have the uptrend. Number two, we have the downtrend. We have the downtrend. We have the downtrend. And then number three, we have the ranging market. We have the ranging market, also known as consolidation market, also known as consolidation market. So these are the three basic types of market structure. We have the uptrend, we have the downtrend, and then we have the ranging market, also known as consolidation market. So there are principles guiding this market structure. There are principles guiding this market structure. So let's start with uptrend. Number one, uptrend. Now the principle guiding the uptrend states that for market to be considered as an uptrend market, it must always create higher highs and higher lows. It must always create what we call higher highs and higher lows. So the principle says for market to be considered as an uptrend, the market must always create what we call higher highs and higher lows. So the market must create what we call higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher highs, higher lows. So the principle guiding this uptrend state that the market must always create what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. The market does not go straight like this. No, it must it goes up, gather momentum, go up again, gather momentum, go up again, gather momentum. That's what the market does. So the principle guiding uptrend states that the market must always create higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So this also is called aggressive move. This is correctional move. This is aggressive move, correctional move to gather momentum, aggressive move, correctional move to gather momentum, aggressive move, correctional move to gather momentum. So that's how it works. So for market to be considered as an uptrend, the market must create higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So this is the principle guiding an uptrend. Principle guiding an uptrend, market must always create higher highs and higher lows. Market must always create higher highs and higher lows. Higher highs and higher lows. Market is expected to be creating higher highs and higher lows. All right, so let's proceed to the second type of market structure. The second type of market structure. Now, the second type of market structure is called downtrend. The second type of market structure is called downtrend. So the principle guiding downtrend state that for market to be considered to be in a downtrend market, it must always create lower lows and lower highs. Lower lows and lower highs. The market must always create what? Lower lows, lower high, lower lows, lower high, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, lower high. Market does not move from up from up down direct like that. It must go down, retrace a little bit to gather momentum, go down, retrace a little bit to gather momentum, go down, retrace a little bit to gather momentum, go down, retrace a bit to gather momentum. So the principle guiding downtrend state that the market must always create what? Lower lows and lower highs. The market must always create lower lows and lower highs. Market is expected to create lower lows and lower high before we can now say this market is in a downtrend or is a downtrend market. I hope we are following. If you have any question, please kindly ask ask me from the comment below. And if you want me to create video on any aspect of uh, forex trading, kindly tell me on the comments below. So this is a typical downtrend market. And like I said earlier, the principle guiding this market is that the market must always create lower lows and lower high, lower lows, lower high. That's aggressive move, correctional move, aggressive move, correctional move, aggressive move, correctional move to gather momentum. So um, this is the second type of downtrend. I will create another video that shows how market changes structure. Market changes structure. But before then, I want us to just concentrate on this one and understand this one because this is the basic. Once we understand this market structure, then we are we are on our pathway to becoming a profitable forex trader. And once you can analyze the market very well, you can analyze any other market, being it stock, bonds and all that. So please let's pay close attention to this lesson. So the next one is consolidation market. The next one is consolidation market. Now, the principle guiding consolidation market says that market must always create equal highs and equal lows. Equal highs, equal low. Equal highs, equal low. Equal highs, equal low. The principle guiding consolidation or ranging market, it says that market must always create equal highs and equal lows. Equal highs and equal lows. Market is expected to create equal highs and equal lows. Equal highs and equal lows. And this is what we call the consolidation market or ranging market. Market is expected to create equal highs and equal lows. There's a way you can trade this one too. But I always advise my students who are newbies to stay away from the market when the market is consolidating to be at the safer side. But you can trade the uptrend and downtrend. So for you to be at the safer side as a newbie, just study the market. Once you see that the market is ranging or consolidating, stay away from it. So these are the basic three types of market structure. Number one, we have the uptrend. Number two, we have the downtrend. And number three, we have the ranging market. And all of them, they have principle guiding them. So like I said, I will create a video that will tell us how the market changes structure, how the market changes structure. So let's proceed to the real market to see how to be able to see the market structure that we are talking about. Now, if you look at it from this Great Britain pounds versus Japanese yen, from here, this is the origin of the trend. You can see that the market is actually on a on an uptrend. From here to here, the market is an uptrend. This is a very typical example of an uptrend. If you shift it towards left, you will see from here to here is uptrend. So this is a typical example of an uptrend. So you can see this is the origin of the trend. You can see the market move aggressive here. That's the higher highs. Then it comes higher low, higher low here. So we have higher high, aggressively higher low here. We have higher high here. We have higher low here. We have higher high here. We have higher low here. We have higher high here. And another higher low is being created currently. So this is a typical example of what? Of a of an uptrend, just like the way we demonstrated from the diagram. So we can see this is what? This is aggressive move. This is correctional move. This is aggressive move. This is correctional move. This is aggressive move, higher high. This is higher low. This is another higher high, and this is another correctional move. So this is a simple and typical demonstration of an uptrend. A simple demonstration of an uptrend. Simple demonstration of an uptrend from the chart. You see, this thing requires practice. When you take your time, spend time with the chart, you'll be able to see all these things. So it's not something that you look at it one day and think you have known it. It requires consistent practice. Consistent practice. So you can easily spot it. You can easily spot when the market is on uptrend. You can easily spot when the market is on downtrend. So this is a typical example of an uptrend. Higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Now let's look for downtrend. Let's look for downtrend. Now from downtrend, this is a typical example of this is a typical example of a downtrend. This is the origin of the market here. You can see lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. You know, a very typical example of a downtrend. So, like I said, this requires a lot of practice. As you spend time with the chart, you'll be able to see this thing very obvious. So, this is the origin. This is the lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower low, lower high, lower low, lower high. A typical example a of a downtrend. So I will advise that you spend time with the market. Please spend time with the market so that you'll be able to, get conversant with the move. You'll be able to spot it anytime you open your chart. When you spend time with the market, you'll be able to see it anytime you open your chart. And like I always advise my students, you can trade the uptrend or downtrend. But once the market is in consolidation, try and stay away from the market. Try and stay away from the market. So let's see the example of consolidation market. Now, this is a typical example of consolidation market. This is a typical example of consolidation market here. You can see equal highs, equal lows, equal highs. It may not be too obvious, but you can see equal highs, equal low, equal highs, equal low. So this is a typical example of consolidation market. Typical example of consolidation market. So this is how to spot consolidation market. This is how to spot it. So let's pay close attention to it and spend time with the market. Let's keep practicing, practicing, practice make perfect. Practice, as they says, practice make perfect. And I tell you, this industry, there's money in this industry. If only you know what you are doing, I tell you, there's a lot of money in this industry. So please, let's pay close attention. It's good to learn other skills. Let's not just depend on one skill or one job. Let's learn other skills so that we can optimize our financial income and then we become financially free. When we become financially free, we'll be able to, attend to things that really matters in this life. Like number one, your health. Number two, your relationship with God. Number three, your family. These are things that you should spend time with. You should have time with. You shouldn't spend the rest of your time looking for money. So if you can pay close attention and learn the basics. If you hear somebody says Forex is a scam, I tell you, they lack knowledge. If you only know, if you only have this skill, I tell you, your life will never remain the same. Your life will never remain the same. So let's take time and learn this skill. It will pay. Long time it will pay. From the beginning, it may look very difficult, it may sound hard, but I tell you, when you spend time with it, nothing good comes easy. Imagine something that can change your life and change the life of people around you, and you're expecting it to be easy. No, 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 no. Nothing good comes easy. So spend time with the market, learn, learn. There are so many materials that you can learn. You can read books, a lot of books, a lot of material on YouTube here. So please spend time with market and learn. It will go a long way helping you to become very profitable. So with this, we have come to the conclusion of today's lesson. So, if today is your first time coming across my video, please kindly assist me and subscribe. This is the only way you can help me. As I release free content, help me and subscribe. It will go a long way, assisting me, helping YouTube to, recommend my videos to as many people as possible who really need to see this, who really need to learn this market structure. Please like it, share it to your friends and your loved ones, please. Thank you so much as you do that. May the Almighty God bless you. And I wish you a very successful career in forex trading. Have a very pleasant day ahead. Bye.